Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, the consumer is dead and he's going to get deader. You're not going to want to miss this. It has a big implications on your portfolio. Let's go.
Trade Genius.
Okay, Bob. So, we're getting data coming in. We just finished Q3. Q4 has a lot of potholes. Take us through it.
Yeah, and before I start the charts here, we saw some really interesting aftermarket action Friday after the quarter closed that suggests to us that the positioning for Q4 is defensive.
Right.
And I know we've been talking seasonality, Phil, that, October has a little bit of a dip and then we rip into the end of the year. But Janet Yellen is going to throw a wrench in that because of the way she's going to be borrowing money. So stay tuned on that. We'll talk more about that later. But what's really happening is really weird, too, because we've been talking anecdotally all month about the consumer. And remember I was telling you, hey, the restaurants are all of a sudden nobody's there. We went out today. Saturday, kind of my wife and I had a chance just to be together, and we daisy chain all the things we have to do for the week. Done. Went to 5 places, and we came home. My wife goes, "This is all we bought." It was like we're even like thinking, do we really need that? Should we really get that? Should we do that? But the places were all dead. All of them on a Saturday in Southern California. So I'm like sitting there going, huh. And then you find this chart that, why don't we show this chart first, the one with the card spending, then I'm going to show you the oil chart. And Phil, this is absolutely amazing. People either stop spending or they were forced to stop spending.
Right.
Amazing.
Yeah.
Look at this drop, guys.
And it's interesting too, because we had one in March as well. Like it's stair stepping down, and these aren't, these are massive drops. These are the different baseline 4-week moving average. So it kind of smooths out the data, but that's telling you that the drop off. That's why I think the spending data and the consumer sentiment and everything like that, I think is going to look. The reports that we get in over the coming weeks on that stuff, you get consumer sentiment every couple of weeks. I think we're going to see big drops in those, and I think it's going to help be a catalyst over October, November into December before we see like some kind of relief in the markets.
Yeah, I think Christmas is going to suck. And it's funny, you can visually see these sell-offs, Phil. Remember we were talking after April, I said, what the heck happened after April 15th? Remember that? It was just like, It was like dead. And then we were talking all month in September saying something just doesn't feel right. People just aren't spending money. Now, having said that, everybody says, okay, now we're going to go into recession here now, and oil seasonality is going to kick in, which I don't disagree with. We're seeing some dark pool data of maybe some of the institutions getting out. They're killing the crack spread, which is the price difference between oil and what's refined. And that usually means that we should see some relief at the pumps here over the next 4 to 6 weeks. Saudi Arabia and Russia have been extremely disciplined, Phil. And if you want to show this chart up, this is the inventory chart of there is no oil, okay? It is collapsing. No inventory. It seems like the whole world is going to no inventory. There's no housing inventory.
Right.
There's no car inventory. There's no oil inventory. It's almost like these companies have said around the world have said, hey, you know what? We're anticipating something really bad happening and we're not going to overproduce. And it's having this perverse effect of keeping prices high and unaffordable for people. Isn't that wild?
Yeah. It seems like it's coordinated across several different sectors. And,
oh my gosh.
What's the end game there? I'm not quite sure, but it just seems too coincidental.
I know it seems like they're just rolling up the sidewalks, and ready to just shut this whole thing down. I mean, this is pretty amazing. And somebody could be like, look, we're going to squeeze the blood out of the rock until there's nothing left. And then that's why I think we're going to start seeing some really big gap downs in spending and economic activity. And the other thing that's really weird to me is that, not that I'm not sympathetic for people making more money, but we're getting all these strikes happening as we're approaching a recession. And I think it's kind of new that we're, you and I both believe we're already in one if you do technically correct, while growth is below inflation. And so I think we've been in a recession now for the last 6 months, but everybody's asking for all this business. And the GM, the CEO GM, she was nonplussed by it all. They asked her, hey, you made all this money. Shouldn't they make this money? She goes, I only get paid if the company performs. So she's hunkering down, and they have all this inventory that they're just going to liquidate, Phil. And then by the time these guys come back to work, she's just going to lay off a bunch of people, she's going to right size the business. And that's just not her. It's going to happen to Ford too. And then the Ford CFO came out and said, if you strike us, 300 to 500,000 parts suppliers, employees are all going to get laid off because we're not buying anything if there's a strike at our plants. So they said that could move the unemployment rate up from 3.8 to 4.1%, which is pretty wild. And, in a way, everybody's so lean now, Phil, I don't think that's an idle bluff. I think, if you go on strike, we're not buying. And, these guys usually carry 3 to 5 days of inventory. Within a week, they're going to have to shut those plants down. So it's going to be really, really interesting.
Hey guys, if you guys don't mind, head over to tradegenius.co. Check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. I think too, this might be coordinated with the central banks. And the reason why I say that is because we haven't had a recession for well over over a decade, let's say, right? And on average, we usually get 5 or 6. But because we're in this regime since the great financial crisis of basically hand-holding from the central banks and injection of money, we've now gotten to the point, and especially with the blow-off of QE, which was the stimulus money and all that stuff that was injected into the economy. I think at this point, everybody can look back and say that was too much because we now have inflation. And one thing history teaches us is that once inflation starts, very difficult to get down, and it stagnates the consumer, it stagnates the health of the economy and the average citizen. So I think Powell in his legacy is determined to try to fight that as much as he can. Now, maybe he only gets to the 3% target, that remains to be seen. But I think the economists and the guys that they have on their payroll, they're probably saying, look, we need to just go into a recession. We haven't had one for 10 years. It's unnatural and it's the missing ingredient. And if we were truly serious about this inflation stuff, then we're going to get this to happen. So if things get really expensive, if people start losing their jobs, you're going to get a slowdown in spending, which is, I think, the big driver of inflation. And I think we're starting to see that now. So as incompetent as sometimes they may seem as central banks, and granted, they got the inflation as transitory thing totally wrong, and they printed way too much. I do think that was a judgment error on their part, but they're not completely stupid. And I think they're going to basically guiding us into a recession without saying that because they can't for political reasons. But I think we're starting to see phase 1 of their plan ending, going into phase 2 now, which will be a rise in unemployment. And that's, I think, ultimately, we've shown that chart in the past where they want to see unemployment higher than core PCE because historically that is what is normal. Right now, core PCE is well over unemployment. So unemployment is going to have to get to about 4.5% to 5%. And then we're going to start seeing them cut.
Yeah. And you're more graceful than I am. I don't think they're incompetent at all. I think they're notorious. But I agree with you. They're engineering something. It just seems too coordinated around the entire globe here. I'm sure some of it's economic, some of it's geopolitical, but I agree demographically too. You have a whole generation of people that are getting very, very, very upset because they see limited upside in their life, and they're going to be taking over the voting. And I don't know if they're trying to fan that flame, to get them to go vote socialist or communist, but maybe Powell's trying to get in front of this thing so people can actually, buy property. It's right now, you saw most unaffordable housing market ever.
Right.
So, yeah, I just think it's really interesting. It's very tricky right now. But just to be clear to everybody listening is that, there's tailwinds here, we think, for the next 2 weeks just because of the flows and the oversold condition. And then after that, we should do a podcast maybe Monday, talk about what this Yellen change in her bond mix is going to mean to equity markets. And it's going to be in direct contradiction to the seasonality. So it's going to be an interesting butting of heads, I think, going into the end of the month.
Yeah, yesterday we showed that seasonality chart. And, basically all of Twitter has caught on to that. I don't know why it's taken this long. Seasonality charts have been out there forever, but it's really becoming a buzz now. And typically when that starts to happen on Twitter, the end is nigh for whatever they're talking about. So I think that it's a good mixture of things to break off from seasonality. And I think that's going to happen mid-October. So to Bob's point, and I know I saw some comments about flip-flopping. We're not really flip-flopping. We're still macro bearish, but I think it's useful if we got a short-term bounce to let you guys know that we expect a short-term bounce, but we're still, those headlines that we've been giving you guys all through the last few months, we're still on that page. We still think that we got a rough go at it going into Q4. And personally, and I think Bob agrees somewhat, that we're going to have a recession in all likelihood and probably are already in one, which means that most of 2024 is going to be a series of lower highs and we're not really going to see a sustained rally. Now, you do have 20% type pops in bear markets. That's normal. We will have some of that, but when you zoom out, you're not making higher highs. And I don't think you're going to bottom bottom out until Q1 2025, because historically, that's what the yield curve inversions tell us. And so far, we're starting to see that play out.
Yeah, Phil, maybe on Monday we should flash them some of the comments we're getting from a lot of our clients in terms of the trades they're putting on with us and the money they're making.
Yep.
So, it doesn't matter what we say, it's how we trade.
Yep.
And just like, economic conversation, the economy is not the stock market's not the economy. We have a short-term bull here. We're going to trade it to the long side. And when we see our algos flipping to the short side, we're going to be shorting the markets again. You can make probably 2 months worth of money here in the next 2 weeks, if you just catch this trend move, because it should be fairly explosive.
Yeah, and these moves in the markets these days are very volatile. They get the V reversals. You can undo a week's worth of drop in 2 days. So it's worth being positioned for that stuff, if nothing else, to get short from higher levels. So that's the view we got, guys. Let us know your thoughts. Thanks for watching. Please hit like and subscribe. Also check out our specials over at tradegenius.co. Get in the room with us. You'll see me and Bob in there, and we will help you navigate these markets week in and week out. All right, guys, have a great weekend. We'll see you on Monday. Take care.
Trade Genius.